Scott Pape is Australia's most trusted finance expert. Through his book, The Barefoot Investor, he has started what many claim to be the biggest financial cult in Australia. He believes that no matter what the income, financial stability is always achievable and it's never too late. It's as simple as opening a few extra bank accounts and automating the entire process. Pape takes a complicated, scary area of our lives and simplifies it into 9 achievable steps that anyone can follow. Step 1. Set up dates with your finances once a month. Take yourself, a partner, or a friend to a restaurant, a picnic in the park, or do it at your own dining table, and put aside time to set up your systems, track your progress, and stay accountable. First, look at areas where you can save money. There are many banks that charge no fees, so switch to them. Review your super. Does it compare to the 0.02% management fee of the world's cheapest super fund Host Plus? Total fees and charges should not cost more than 0.85%. Check what it invests in. If you're under 45, opt for the growth option. Then check your insurances and make sure you're covered for everything you need and not more, as in, insure yourself for things that can kill you financially, like the house burning down or traveling overseas. Always opt for the higher excess, which means cheaper insurance for you, and every year Google the best offer and switch if you find a better deal. Then, for emergencies, work towards putting aside at least $2,000. Step 2. Set up your buckets. This is how you should be allocating your income each pay. Open up a bank account for each bucket. Set your salary to go into the blow bucket used for everyday expenses like rent, insurance, utilities, and food. If these add up to more than 60% of your pay, look for further ways to cut costs. Then, automate the rest to go into the others every month, with 10% going into your splurge bucket for little indulgences like eating out or a new pair of shoes, and another 10% to the smile bucket for more expensive treats like a wedding or holidays. Then 20% goes into the fire extinguisher bucket for crucial costs like debts and big purchases like homes or cars. Any extra money goes into your Mojo account from things like side gigs and garage sales. The $2,000 you saved for emergencies goes in here too. This account is your cushion for investing and emergencies. For buckets with long-term savings, as in the last 3, open up high-interest savings accounts for them. Pape recommends ING Savings Maximizer and UBank USaver Savings Account. Step 3. Domino your debts. Get a pair of scissors and cut up your credit cards. You don't need these little bits of plastic coaxing you into spending beyond your means. Calculate the debt on each and call up your credit card issuer and tell them that you want 0 interest on your debt for 18 months. Just say that you want them to match another bank's transfer offer. Of course, there's no way they'll actually do it, but there's a good chance they'll cut your interest at the very least if you stand firm. Now, use money from your fire extinguisher account to pay off the debts month by month until they're all gone. It'll be a lot quicker than you expect. Then line up the rest of your debts, from smallest to biggest, and use the money from your fire extinguisher account to pay these off too. Is one of them a car debt? If it is, sell the car and buy another outright, one that works and does the job. Don't pay interest on something that's depreciating in value every second, and anything fancier than basic is just a status symbol. Step 4. Buy your home. Despite what we are seeing in the market, Pape shows us how buying your own home is still achievable. You can do it in 20 months on an average income of $5,000 net a month, as long as you avoid these incredibly common mistakes. Waiting for a house market crash. You can't plan your life around things you can't control. Buying a home you can't afford. Buying an investment property first. Renting and forgetting to save. Not considering other options, for instance, moving into an apartment or moving to the country. Use your fire extinguisher account to save for a home deposit. Pape recommends you save 20%, which is required by most lenders, and it saves you from paying lenders' mortgage insurance. If you have a partner, you can get your deposit quicker by living off one income and saving the other. You'll reach $100K in 20 months. When looking for a lender, find a cashback mortgage broker who charges an upfront fee but will refund you the trailing commission into your loan each month. You'll get back approximately $1,000 a year every year. Borrow less than the bank will lend you, and repayments should be generally less than 30% of your take-home pay. Step 5. Supercharge your wealth. Supercharge your super to 15% each year. As your employer is already putting in 9.5%, all you need to do is increase it by 5.5%. Then watch as the compound effect works its magic. A 30-year-old with a 72K salary who already has $50,000 in his super will be on track to having more than $2 million when they retire at 67. Supercharge your Mojo account by stowing some more money in investments like shares or property. This is the most important step to secure your financial future. The best way to start is to use an index fund with low management fees and then reinvest your dividends. This will buy shares in the biggest 500 companies. It's so easy, you don't have to do any of the research or work yourself. Even through the Great Depression and the recent financial crisis, the rationale is sound. If you'd invested $1 in 1802, it would be worth more than $930,000 today. Even Warren Buffett said he would invest 90% of his money into index funds for his wife when he dies. Step 6. Boost your Mojo to 3 months. If you followed the steps, you should already have a minimum of $2,000 in your Mojo account for emergencies. Now boost it to whatever you put into your blow bucket times 3. With 3 months worth of expenses of Mojo, you're telling your family and the world that you're putting them first. This feeling of security that comes with having more than enough never leaves you. It becomes a part of who you are. It colors your entire view of what's possible. It's what gives you your Mojo. Congratulations to you if you get to this point. Step 7. Get the banker off your back. Save tens of thousands of dollars and pay off your mortgage faster by following these rules. Don't fall for any of the extras. It's a loan that you pay back with interest over time. Keep it simple. Don't fix your rate. Then you can't switch to a better deal without paying high fees. It's too much of a gamble. Get a cheaper rate by complaining to your bank. It's easier than going through the hassle of refinancing. Your negotiating power is that it costs the bank from $1,000 to $6,000 to replace you. Research the best deal on the market, call your bank and threaten to refinance with someone else if they don't drop their rate. If the bank calls your bluff, make the switch. Make extra repayments. An extra $1,000 a month could save a $400,000 18-year mortgage more than $77,000 in interest. That's 7 years off the mortgage. Step 8. Nail your retirement number. At a minimum, you need a paid-off home, plus $250K in super for couples, and $170K for singles. To receive the maximum pension, this is the most you can have in your super. When you retire, keep yourself active by working even 1 day a week with something like Uber. The government allows retirees to earn close to $29,000 each a year, tax-free without affecting the pension. For singles, it's about $32,000. To summarize, the pension, which is $34K for couples and $22K for singles, plus the $12.5K you can withdraw from your super every year, plus earnings from small jobs, means you will have a minimum of $67,000 in your pockets every year. According to the statistics from the ASFA, this is $8,000 more than you need for a comfortable retirement. Make this your number to nail before you even consider retirement. Step 9. Leave a legacy. If you followed the steps up until now, you're in a good position to think outside of you. Give some money or time to those less fortunate. You can even make microloans to some of the world's poorest entrepreneurs. You want to leave the world knowing it's better because you were in it. What will you be remembered for? The key takeaway is, gain some financial security. It's definitely possible. All it takes is a few initial steps and the rest of the process is automated. so it will take care of itself. Begin by cutting up your credit cards, clearing your debts, and then you can start investing for your retirement. Savings equals freedom. When you've got money in the bank, you live life on your own terms. The power is yours. You call the shots.